The office real estate market is clawing its way back from the brink. And this is the part most people miss. Early signals of recovery may feel subtle, but they carry weighty implications for tenants, landlords, and investors alike. According to JLL's second quarter data, overall office leasing volume dipped by just 2.2% compared to the previous quarter, effectively holding steady. Yet behind that modest decline, active space requirements, the total square footage tenants are actively seeking, jumped by 5.8% quarter over quarter, reaching levels unseen since the final quarter of 2021. But here's where it gets controversial. Some argue these figures reflect simply a reshuffling of tenants chasing prime addresses, rather than genuine, widespread demand. JLL had already flagged signs of a turnaround in its first quarter report, noting a 13% year-over-year rise in leasing activity. CEO Christian Ulbrich attributed much of that strength to return-to-office mandates issued by companies, as well as continued rent increases driven by fierce competition for Class A and A-plus buildings. This flight-to-quality trend has tenants flocking toward top-tier office towers, pushing spillover demand onto recently upgraded Class B properties and raising tough questions about the fate of lower-grade spaces. Markets that stood out with positive net absorption, the measure of occupied space minus vacated space, include Atlanta, Austin, Dallas, Houston, Nashville, New York City, and Tampa. In the second quarter, developers and property owners converted or redeveloped more than 8 million square feet of underperforming office stock into residential units or alternative uses, a move that helped rebalance overall inventory, but also sparked debate over whether offices are being permanently repurposed. CBRE's figures echo a cautiously optimistic outlook. The firm reports 2.3 million square feet of net absorption in the second quarter, marking the fourth straight quarter of positive demand. Leasing activity in the first quarter climbed 18% year-over-year to 54 million square feet, comfortably above the 5-year quarterly average and signaling that healthy demand persists, even as new supply remains limited. On the investment side, Avison Young recorded $7.8 billion in office property sales during the first quarter, a 9.7% increase from the same period last year. Cushman Wakefield similarly credits its first quarter revenue gains to robust office and industrial leasing, underscoring that capital continues to flow into commercial real estate. These encouraging metrics suggest the office sector is on an upward trajectory. Yet it remains to be seen how durable this rebound will be. Will the flight to quality leave behind an army of obsolete buildings? Are conversions to residential a clever adaptation or a sign of structural decline? Share your take. Do you believe this recovery is for real, or is another downturn lurking just around the corner?